Hey everybody, Felix Stoppelbaker here. Wanted to make a video that EOS is credit default insurance. And that might sound kind of wild, and what I really mean by that is when we look back at the financial crisis of 2007 and 2008, going into 2009, before the crash happened, you have to understand that the credit markets, the bond markets, they have a priority to be paid before the equities, the stock markets. In case of a default, in case of a liquidity crunch, where there is a crash in the markets. Credit markets often have first priority, and they're also a lot bigger markets. And in 2000, before the actual financial crisis, you could buy insurance on bonds, and people who had insurance on those bonds before the crash, sometimes they would pay $5,000-$6,000 for some of this insurance. And once the crisis ensued, that same insurance, in order to guarantee that your bonds would be paid because they were first priority, went from $6,000 roughly, $5,000-$6,000 to almost $9 million. And if you would have had that policy, you could have literally sold that policy and made a ton of money. And also, you would have been okay had your bonds defaulted. But there was, different places to buy this insurance. Some, like, for instance, JP Morgan would have literally crashed had it not been for AIG, like, having to get a ton of insurance, like, on the back end for them to be able to back all the bonds that they had so that they wouldn't actually default, because JP Morgan was literally insolvent had they all had to, check their bonds and or balance their sheets and stuff like that. So the problem was with AIG, being the insurer of those bad bonds that JP Morgan had, was that there was counterparty risk associated with that. And even though it went from $6,000 all the way up to like $9 million or some crazy thing like that, there was counterparty risk associated with that. And what you see with EOS is the same type of play, where we see the current financial system about to collapse. That's no secret. I mean, all the top economists who understand exactly what's going on is we're way over leveraged. The mathematics just don't line up. Any way you slice it, we can't pay our bills. Their WEF, the World Economic Forum, is demanding $100 trillion, in a certain amount of time. So they're gonna literally squeeze every penny out of every single person. And, that includes crashing the dollar in order to literally transfer all the assets from the population into the hands of a small conglomerate such as the World Economic Forum and other Davos types and that type of crowd. And so I see that as being something that plays out as far as a collapsing dollar, a crashing dollar. And when that type of event happens, you want to be in something that has no counterparty risk. And I see EOS as having zero counterparty risk because you've got potentially the Bitcoin settlement layer on something like a bullish exchange using EOS. And then you've got a roughly $4 or $5 price on a per token on an EOS token. And if everything crashes in the traditional space and people look for those safe havens, or also, people look for more risky, people are more risk averse when they're losing everything. They'll throw stuff into Pokemon cards, and they'll throw stuff into watches and bags, and we'll see all types of luxury goods and scarce physical items, skyrocket in price because people will be fleeing to try to find anything of value. And, if you can capture something like an EOS asset before the price shock sets in, because once there's a bond issued, and especially if there's a dividend associated with it, institutions, corporations, money managers, pension funds, endowments, like everybody's going to be trying to get all this. And you got to understand that, like, even as we speak, like a little under half of like all EOS are already staked, like as it is. So there's just so few EOS available that, given the price mechanism, of the protocol itself, any type of price shock and all that kind of stuff is really going to make this price juice. People have seen how quick this thing can move before. It went from a few dollars all the way up to $22. It went from a couple dollars all the way up to $14. And both were extremely quick moves. People were FOMOing in both times, and then when it came back down, those were the people that sold, saying they lost millions of dollars, all that type of jazz. And I really see this just being the opportunity, being the way that people can purchase default insurance on credit markets, because we're going to see the bond markets crash. China is going to stop buying all our debt. They're going to start selling all of it. Other countries will follow suit, and you just have a dollar spiral, and people rush to things like EOS, especially when bullish launches and all this type of stuff. There's a lot of people who you can't even get them to understand that EOS isn't a completely dead blockchain. So it's like, why go into depth of like all these different factoids of all these different things that when the person doesn't even think that it exists. So it's like, I know like there are people listening who do care, and like that's why it's important to like put these ideas out there and really get a full opinion and a full like view of what's possible, because there are people who are closed-minded, but those who are open-minded and those who see what's coming, those are the ones that make all the difference. It only takes a handful of people, and I just see like a huge opportunity. So I'm protecting myself, and that'll be the way. That doesn't mean that the price will go skyrocketing, but it does mean that the odds are in our favor, especially if something like a dollar collapse ensues. So I just want to put that out there. EOS is credit default insurance. So that's how I'm treating it, and that's how it is. So just want to put that out there. Stoffel Baker out.